Yeah, so the S&P 500, again, up 12. The large components, the largest companies within there are up about 53%. Those large, relatively few companies are pulling a lot of the weight of the market. So it's a pretty narrow market is what we describe it as.
Do we see this often? Is this abnormal?
It is pretty unusual. In fact, we looked at this earlier. We found that if we looked at all 500 companies in the S&P 500 index, and then which is up 12%, and we looked at, okay, how many of those 500 companies are up more than 12% in the year? Okay, it's about 28%. Now that's pretty extreme. In fact, that's on track to be the lowest number going back 50 plus years.
Let's talk about the difference between kind of that small cap leading large cap.
Yeah, so over time, if we look at over long time periods, small companies have tended to outperform large companies. Now, lately that has not been the case, of course, as we just mentioned, large companies have been outperforming because of those large mega companies. What's always the tricky part is the timing on it, right? If we know the averages, but again, no one experiences the average, trying to determine the timing around when these are going to shift to be in favor or out of favor can be challenging to try to time with exact precision.
Right, you mentioned using kind of bands to help decide when those buy-sell moments might be.
Yeah, exactly. And a good example is looking back to the 2020 time period. Right, large was outperforming small in those periods leading up to that, and it was pretty extreme, where we had large outperforming by quite a bit. That same thing happened in the late 90s. We saw the same thing where in that technology boom era, large was outperforming small by a wide margin. It was way outside the norm. And that's what we look for as investors and with long-term time horizons is what's outside the norm. And then what are some of the actions we can take to ideally take advantage of some of those transitions, some of those market shifts that we think will take place over time.
Having the patience to sit with this volatility in these smaller stocks has in the past yielded rewards.
Yeah, investors that have held smaller companies over time, we know that over long time periods, small tends to outperform large. And so it's important to be present. It's not just that we want to hang on and just sit tight, but also look for opportunities to add or rebalance around those positions.